months in the stock market, there's a special ritual: earnings season. Most publicly traded companies report their results in the same 4 to 6 week time span every 3 months. A flurry of company specific news. For the biggest companies, their earnings may move the stock market as a whole, or they may move certain sectors of the market. This is an almost real time insight into how the last 3 months went, how the current 3 months are going, and how the months ahead look. In a world where information is everything, this is as close as we get to a Super Bowl. Rituals come with specific parts, and in our case, earnings calls are a really interesting part of the puzzle. These are conference calls where management teams share their results, basically reading the press release that they've already issued and making a few points of emphasis, and then take questions from analysts. Like every ritual, it comes with its tropes and its dull parts, and the parts that might make you laugh, like when the analyst says, "Hey, great quarter, guys," before they ask questions so that management will feel good about it. But these can also be super valuable. It's a way for us to hear, or better yet, read, management's story for how things are going, as well as to hear what investors' concerns are about the company and to see how management responds to this. It's rare to get management speaking openly in a free-flowing conversation about their company. This is not quite that, but it's as close as we get, and it's a valuable piece of the research process. While you can find a company's earnings call on their investor relations website, I almost never listen to calls. It takes up more time, it's harder to control, and for whatever little benefit I get in hearing the management's tone or clearing up any foggy words in the transcript, I lose in the time that I have to spend doing it. Instead, I usually read earnings calls transcripts. This allows me to either go through things thoroughly or just scan for the information I want. Sometimes I just want to read the Q&A, or other times I just want the guidance. Whatever it is, this gives me more control than listening to the call. Some companies will actually have the transcript on their investor relations website. I just noticed Nike does this, for example. Unfortunately, most companies do not do this in my experience. So to get transcripts, you're going to have to find it on another website, usually an investing website, and unfortunately, many of them charge. I'm going to put up 4 websites that have transcripts available in some form or the other on the screen. There's Seeking Alpha, which I've mentioned before. Quarter is a company that's dedicated to earnings calls and earnings transcripts and other earnings related things. There's Motley Fool, where calls are available freely, and Alpha Street, where, as far as I can tell, calls are available freely, though who knows if that will last. Earnings calls transcripts are not an absolute must. You can study a company without the transcripts. Still, as you gain experience as an investor and as you study companies, I think you'll find that transcripts are a helpful tool for you to have access to. The beginning of an earnings call after the formalities will usually feature the CEO or somebody else senior at the company telling how the quarter went and giving a state of the business. Some teams will proceed directly from the press release, more or less reciting it, and other teams will speak more extemporaneously or share more examples to illustrate their story. Some teams will be more buttoned down, others will be more excitable. The typical script will have the CEO give the state of the business, and then the CFO, the Chief Financial Officer, go into the numbers in more detail, breaking them down more or less line by line, including the outlook and the anticipated guidance for the months ahead. You want to watch for how the story shifts from transcript to transcript. Is there a thread running through this that makes sense over time? Is there progress that you're seeing? How is the management team dealing with setbacks? You'll also get a sense of the tone, even if you're reading for a given quarter, of how a company feels about how they're doing. And you may get a sense of the character of a management team, which will help you better understand a company. The opening script is something like the management team's last chance to put their stamp on a quarter, so you can expect them to put their best effort here to explain what's going on. Beyond the little quirks of great quarter and how analysts and management teams engage with each other, There's a lot to offer in the Q&A section. Let's start with explaining. Analysts are sell-side analysts usually. They work for investment banks who may be seeking business with the companies involved, but they're providing research specifically to professional investors who are clients of the investment bank. They're not there to make bold calls or give us divergent views. They're in cahoots with the management team. They're working together. They are professional peers to some degree, and they're trying to align their models more or less to the company's models. They're trying to make an independent analysis of it, but they want to be understanding what a company is doing. They're in some sense trying to translate what a company is trying to achieve to the broader context of the market and what investors care about. That means that some of their questions will be very nitpicky and trivial. How should I model gross margin in light of the cotton headwind for the last 2 months, for example? Very short term and not super helpful in the broader picture of a company. At the same time, those questions accumulate and they help us understand what investors care about. The analysts are, after all, reflecting what they know and what they're hearing from investors. These are professionals who spend all their time on this company and similar companies and are trying to put them into context that's helpful. So while sometimes what investors care about is too short-term focused, isn't relevant for the bigger picture of years, often understanding what is driving investor sentiment will help you no matter what time frame you're looking at. And it'll help you understand which red flags or which question marks you need to figure out when you're trying to understand a company. The last thing to watch for in earnings calls is the occasional outburst. Sometimes an investor will join the call. The call is usually open. Anybody can dial in, and then it's just a question of whether the management team will take the question. If an investor calls, their question may have more pointedness to them. They have skin in the game. They care about the company's results because it affects them. So they may have opinions. They may be driving at certain things. Their questions may be more interesting, but also their reactions may be more interesting. They may be upset with the management team's performance and get angry at them. Or they may be frustrated with how evasive a management team is in responding to questions. That can lead to fireworks. Sometimes it's the CEO who's bringing the heat, though. Lorenzo Gonzalez of Cleveland Cliffs, an iron ore company, famously once called analysts on a call a disaster, an embarrassment to your parents for not understanding his company well enough. Mike Mayo, a renowned bank analyst, is also known for getting into it with CEOs on earnings calls. This is entertaining, but also this can highlight certain pressure points or situations. Just like you're waiting for Mr. Market to go to extremes for interesting buying or selling opportunities, so too, when you hear an outburst or a pressure point on an earnings call, it's usually highlighting something either about the company or the industry that might break soon, either for better or for worse. Whenever you're researching a new stock, you have to be both open-minded and skeptical at the same time. Each new piece of information has to be weighed carefully and put into context. Will this affect the stock in the end? Is this getting better? Should I take management's word on this topic? And so on. The earnings transcript or the earnings call is one more place for you to practice skepticism while taking in new information. It's a freer format, and management teams can develop a style and an approach to earnings calls. The Q&A section also can be quite canned, and yet both parts of it can shed light on an investing story in a way that the filings and press releases and presentations on their own can't quite do. Transcripts are also a little bit easier to scroll through and a little bit easier to take in information, at least in my point of view. I think that transcripts are a vital piece of understanding a company's business model, getting details on its financials, understanding its management team and assessing its quality, and piecing together a buy case. I think you should put these on your radar, even if you're somebody who prefers to listen to the calls rather than read the transcripts. Keep these in mind. In my next video, I'll talk about other filings that you should watch out for beyond what we've covered in 8Ks, 10Ks, and 10Qs that can help you understand a company. And I'll also do a video on places where you can find information that go beyond what we find from the company. Everything else we've done so far starts from the company, but you also need outside information. So we're going to look into that a little bit. Subscribe to this channel to get those videos when they come out. Check out shortinvestingguide.com for links related to this post or this video and anything else on learning how to invest in the stock market. Thank you for watching, and I hope to see you next time.